So first of all, tonight's discussion is going to be about small business credit, both personal and business, and why it matters for you and your business. So actually, I should think here. Let me just go ahead and connect to make sure that everyone can see the deck, because I don't want to start talking and have people find out that it isn't working. So I'm looking at the chat session now. Can you at least reply that you can see my my screen? Okay. So I got one confirmation that it is, you guys can see it. So I will go ahead and trust that that is valid for the rest of you. And again, let me make sure here the recording is on. All right, perfect. So first of all, a little bit about myself. I've been here with Creditera for a little over a year. I'm the head of strategy and business development for the company. I've got about 15 years of corporate experience prior to coming to Creditera. I moved out to Silicon Valley in 2000, in the first internet tech boom. I guess we're well into our second here. I came out to work for Alta Vista back in 2000. And then after that, I spent 7 years at Oracle, and then 7 more at Intuit, where I was director of strategy and corp dev. Then I was the product leader for QuickBooks outside of the United States. So the Canadian and Australian and British versions of QuickBooks and payroll. And then my last job there, I was the head of customer care for QuickBooks Online. And as I mentioned before, I've been with the company since our A round closed with Kleiner Perkins back in July of 2014. So what we're going to talk about today is your business and the fact that your business has a credit score, whether you know it or not. So most people are very familiar with the fact that everyone has a personal credit score. So in this particular case, you've got this woman here, Gloria, with a 715 credit score, and she's got Gloria's Cosmetics. But the reality is her business has a credit score just the way her person does. And in many cases, this business credit score is used for a variety of purposes. Now, the purposes can vary. Most people think automatically about financing, and financing is in fact important. But there are other reasons in which a small business credit score matters. It matters in terms of your payment terms, whether you pay 30, 60, or 90 days. It matters in terms of whether or not you can get small business insurance coverage, and if so, at what price. It also matters in terms of your ability to get a contract with the US government or other large-scale retailers. So it sounds like my deck is not showing here, so I am going to go again. So right now you'll be seeing this picture of this old-time photo of Gloria here in her cosmetic shop. And again, Gloria the individual and her business, and they are separate, but yet they are looked at in combination. So why does business credit matter? I mentioned before, obviously getting finance and credit, and we've already talked about that, and I think most people realize that credit scores matter for those things. But like we said, it matters for a lot of other things, and it can really lower your costs, whether it is insurance, the terms that you pay, your merchant processing fees, and so on. And at the end of the day, it also can save you time. And it can save you time primarily because now you're going to get the best deal possible without working too hard for it. So first of all, where do these scores come from, both personal and business? So there are 4 national credit bureaus: Experian, TransUnion, Dun & Bradstreet, and Equifax. Now, FICO is not a bureau. It is a score provider. And what FICO does, in case you ever hear about FICO scores and so on, FICO stands for the Fair Isaac Corporation. And what they do is they're the ones who pioneered the algorithms to determine the risk factors that somebody might be late in their payments. So the credit bureaus, Experian, TransUnion, Equifax, D&B, they collect data. They suck in data about you, about your business, and they do it through for a variety of different ways, which we'll talk about in a second. And the way they had worked things out was they would suck in all this data, and they would give the data to FICO. FICO would have their engineers and their statisticians who would ultimately create a formula that would determine your credit worthiness based on that historical data. And so that's where the FICO score comes from. Now, over time, many of these bureaus realize, well, if we're the ones with the data and the data really matters, why are we giving this data to FICO so they can come up with their own score on us? Why don't we create our own scores based basically by reverse engineering what FICO has already done? And those companies did that, certainly on the personal side. So Experian and Equifax are the two bureaus that report both on business and personal. TransUnion reports only on personal, and Dun & Bradstreet only reports on business. But with Experian and Equifax, they created their own scores on personal credit worthiness risk that was based on FICO. So if you ever hear anyone say that's not a FICO score, it's a FACO score, that is a score provided by Experian and Equifax based on their own data that they normally would have given to FICO and their own algorithms that were based essentially by reverse engineering FICO scores. For the most part, they're generally accurate for what FICO would come up with. And the reason they did that is for, like I said, a variety of reasons, not least of which was they were paying a bunch of money to FICO to create something they thought they could do for themselves. But then FICO also sells that score at a pretty high premium. So these other bureaus ultimately started providing their own scores. Now, let's talk a little bit about personal and business credit and those scores and how they differ. On the personal side, they are very, very similar. They measure the same things and they have the same score profile. So whether it's TransUnion or Experian or Equifax, which we don't have up here, they have 97% data consistency between all those bureaus. They're all looking at the same thing, and they all have a score that's very similar, roughly 300 or 350 to 850. So if you're over 750, 770, you're in a really good shape. Maybe high 600s to 700s, you're medium, and so on. But the reality is, on the personal side, the main takeaway is they're looking at the same data and they're measuring the same thing, which is what is the likelihood you're going to be late on a payment of over 90 days in the next year. Now, on the business side, first of all, they have different scoring models and they look at different things. So Experian and Dun & Bradstreet, Experian has something they call the IntelliScore. Dun & Bradstreet has something they call Paydex. Now, FICO SBSS is a different business score. It's a model of personal and business. And that is a score that rates from 0 to 300. Experian and D&B, it's 0 to 100. And moreover, D&B and Experian look at different things. Dun & Bradstreet's Paydex score is purely backward looking. So they take, if you have 4 people, trade lines reporting against you, they'll essentially determine how you're doing based on your payment record. Do you pay your bills on time or even ahead of time? IntelliScore, on the other hand, is forward-looking. It looks at your historical payment record, but it also takes into consideration your industry, your time in business, and a variety of other factors to determine, looking forward, what are the chances you might be late. So the best example here might be a restaurant. If you're 1 year in business as a restaurant and you pay all your bills on time, you might have a great Paydex score from D&B. But on Experian, it might be very average or poor, primarily because you're in an industry, restaurants, that tend to fail. And again, they are forward-looking. The FICO SBSS score is a combination of your personal and business score, And in this particular case, it is used for granting SBA loans. So most major SBA lenders, whether it's your local community bank or even a major money center bank, they have to look at the FICO SBSS score to expedite approval, right? D&B Paydex score, that's something that a trade services firm might look at, such as a Walmart or a Target, whether you can work as a contractor for them. And Experian would probably be more along the lines of a business credit point. So personal, it's all very uniform, very similar. Business credit, rather distinct. So where do they get information about you? First of all, once you register your business as a legal entity, that becomes a public record. And those public records are sucked up by these bureaus. So on the business side, again, it's Experian and D&B as well as Equifax. They're going to be pulling in this information on you. Whether you know it or not, there's a record about your business and people want to know how trustworthy you are, and they're going to pull that data in. Perhaps even more crucially, and this is where many small businesses, whether brand new to the market or been around for a while, tend to fail, and that is that information is sent to the bureaus both by lenders and business creditors. So if you get a certain business credit card, if you get a certain business loan, that bank, that credit card company is going to start reporting data about you and your business to those bureaus. Now, what many people don't realize is that even if there is a vendor out there who maybe supplies your steel or your raw materials or whatever it might be in your small business, particularly if you're a manufacturer and you've got various vendors and suppliers, those vendors and suppliers can be trade lines for you. And if you are paying them on time or ahead of time, you should absolutely make sure that they are reporting your payments to those bureaus. The bureaus are starving for information. They want to know as much about you as possible. So if you are a strong business who pays on time or ahead of time, you should, by all means, ensure that anyone that you're paying is reporting your payments to the credit bureaus. So what are the credit factors when it comes to a business credit score? The reality is it's not too different from your personal reports. So your debt to income, your payment history, do you pay on time or ahead of time or late? Length of history, how long have you been in business? Is this a restaurant that's been around for 20 years, 10 years, or is it 6 months into business? Utilization, when you get credit, do you actually use it and are you responsible with it? And then again, the business data that kind of comes into the bureaus. So next we'll talk here about a thin file. And what a thin file means is the bureaus know that your company exists. And they know that it exists because you've been legally incorporated. Maybe you've got 1 or 2 companies that are reporting because you have a loan or a credit card, but they do not have enough information about your business to provide any sort of assessment. So with the case of, for instance, the Dun & Bradstreet Paydex score, they require at least 4 trade lines to come up with a score. Trade lines means people who are reporting against your business in terms of how you pay. So unless you have 4 entities reporting against your business, and it might be a credit card company, a lender, a utility, a communications company, how you get your cable, they at least want to see, are you paying your bills? In many cases, we have small businesses that come to us, and many of them have been around for years and years, but they have a thin file. And a thin file means we know this company exists, but we don't have enough data to actually give you a score. You're kind of a ghost to the bureaus. And that's something that in many times will freak out a banker or lender when they're like, this company's around, we know it's been around, but there's just not enough information to pull it on them. And that's where you don't want to be. If you want to be in business and you want to have a solid profile, make sure that at least there's enough information where they can pull together a profile that is accurate and hopefully positive about your business. Now, there are major differences between your personal and your business credit. We already talked about number one, the difference in those scores, right? If somebody says, yeah, I know my business credit, I got a 730, that's not your business credit score, that's your personal score. But number two is really important. FCRA stands for the Fair Credit Reporting Act, and that's an act of Congress that regulates the use of your personal credit report as an individual. For instance, there are only 9 permissible purposes for which someone can pull your personal credit report. And you have to give them access to pull it. So anyone who might have joined this call, I cannot just go and find out what your credit report looks like. On the business side of things, it is very much the Wild West. Anyone can pull your business credit report at any time and for any reason. So if you have a local ice cream shop, your competitor, your supplier, your customer, anyone could kind of pull up and find out at any time. They don't need reason. So that's a really big difference between personal and business. On the one hand, small businesses should be aware of that. And on the other hand, depending on what your business is, this might be a really valuable tool for you to know. My brother-in-law owns a bottled water distribution company in Pittsburgh, Pennsylvania. Not too long ago, somebody came to him with an offer to be a customer of his with 6 locations in the greater Pittsburgh area. However, he asked for 90-day payment terms. Now, my brother-in-law was excited to get this size of a contract, but the prospect of driving all over the city for 3 months, delivering water and inventory for which he was not getting paid, was a little bit disconcerting. However, through the use of our product, he was able to determine that this client had excellent payment history. His Paydex and his IntelliScores are both over 90. So this gave him the confidence that he needed to accept that contract and to ultimately fulfill on it. So on the one hand, you should know that people can look you up, but on the other hand, you should know that you can look up other businesses, potential customers, to determine whether you want to give them 30, 60, or 90-day terms. Number 3, business reports are even more likely to have errors than personal reports. Now, personal reports are known to have all kinds of errors, but based on our own assessment, we think that perhaps 1/3 of business credit reports have some kind of errors on them, particularly when they conflate similar sounding businesses. A good case study from our customer experience is a company called Wells Trucking in Northeast Arkansas. This was a company who came to us after they'd been denied 1, 2, 3, 4 times for loans, despite having a very well-run business. It turns out that their business credit report had been conflated with another company in Arkansas called Wells Shipping and Trucking, which had declared bankruptcy and had a variety of other problems, which was showing up on their reports. So at the very least, you should ensure that your report is your report, it's accurate, and it's completely in order. Number 4, the concept of payments. On the personal side of things, if you pay up to 30 days late, you're still good. On the business side, if you pay so much as 1 day late, you're late. And you don't get a perfect score unless you pay early. So that's something that businesses are held to a higher standard when it comes to your payment terms. Now, finally, a 5th point that is not here on this slide is that your reports, personal and business, are created from very different looking views. On the personal side of things, demographics have absolutely no weight. Your age, your race, your income, all of that is blind on your personal credit report. all they're going to look at is your ability to pay and your history. On the business side of things, the demographic equivalent is firmographics. And firmographics is all that matters. Your industry, your revenue, how long you've been in business, where you're located. All of that is a core component of how your business credit is created. So, why should you care? We already talked about this. Yes, it's business financing and credit, but it's also access to government and enterprise contracts, how much you pay in insurance rates, your ability to get an equipment lease or finance of durable goods, commercial real estate. All of these things are going to be built on your credit. And the reality is most small businesses are failing because they don't have full access to the financing that they need. Depending on the statistics you look at, anywhere from 50 to 70% or plus of small businesses are denied financing when they go for that loan. And if you really understand your personal and business credit, your chances of getting approved are far greater. The first thing you want to do is separate your personal from business credit profiles. And the sooner you can get away from a personal guarantee on the loans that you're getting, the better off that you will be. And if you have a successful business, a money-generating business that you can demonstrate via your business credit scores, you can probably access multiple times credit value versus that business than as an individual. So the sooner you can establish your business as a separate entity, as a profit-making enterprise, banks are going to give you more money more often and at better rates. So how do we start from here? First of all, build up that credit profile. Figure out what your current business and credit scores are. It's not very difficult. That's basically what our product does. Number two, if you haven't done so already, incorporate your company. Make sure it's a legal entity so it's on the books. Number three, establish an employee ID number, an EIN. Again, in our product, we'll show you exactly how to do that, and it's free and it's fairly painless. Number four, open a bank account and start collecting and securing the payments that you make as a business in a separate bank account. Don't intermix your personal and business accounts. Number five, start getting trade lines for that business. Even if you're just starting out tonight, once you incorporate your business, you can get basic credit lines through Home Depot, through Chevron, Staples, FedEx, Kinko's. They will give you $200 or $300 credit lines, regardless almost of your personal credit rating. They will give that to you, but more importantly, it will report against the company that you're founding, not you. And that's what you want. You want to start showing that your business is a real enterprise and it pays its bills on time or early. And then last but not least, you can get a DUNS number. That stands for Dun & Bradstreet. You can do that through us for free. And that's a good way to ensure that the bureaus at least have your information and they start reporting against it. So once you get that built, like I said, business bank account, make sure that you've got your business accounts that are all going into a separate account. Make sure that you're charging your business expenses to that business. Do not intermingle the accounts. Number three, at some point, you're going to want to go and get some business insurance. They're probably going to look at some of those accounts, but that's also going to establish your business credit profile. And then again, that number four of building the business credit, variety of ways you can do that. There's even some business credit cards that directly build on your business credit profile. For instance, Capital One Spark, they have a variety of different cards, some of which with rewards, but they even have one that directly helps you build your business credit profile, and that's like the major function of that card. So as you build it up, just make sure, that all is accurate. Number one, check it regularly. Make sure that it's accurate. If not, you can dispute it. Number two, You don't want a thin file. If they've got something on you, make sure that it's accurate. Number three, if you can, get at least 4 companies to start reporting against you to show that they're a viable business that pays their bills on time or early. And number 5, just plan for the future. I can't tell you how much I'd encourage you to use other business products. Live Plan, for instance, from Palo Alto Software for business planning, or your business planning software needs, as well as QuickBooks for accounting. There's a variety of other solutions out there that, as a small business, you can leverage to ensure that you're on really solid ground. And that's ultimately why we created our product, Creditera. It is free. Our core standard product will give you your free TransUnion personal score. If you've been around for a while, we'll let you know whether or not Dun & Bradstreet and Experian have profiles on you, and if so, whether there's any derogatories and so on. And we have all kinds of free features within the product to help you build it out. So that is the presentation tonight. I sincerely appreciate your time this evening and working with the idea to IPO and Rob. And with that, I'll open it up to any questions. I can see here the chat, and if you guys, I guess, just want to chat any questions in there, I'll answer them directly. So first question is, can we get a copy of the PowerPoint? Absolutely. I'm happy to send this to everyone. We're also recording this session, so if you want to hear my voiceover, that'll be available as well. Next question is, how long will it take to get a solid business credit profile? That's a great question. A lot of it depends upon your ability to get the trade lines reported. But that being said, you could probably build a pretty solid business credit profile within 6 months. They're going to want to see how many trade lines you have reporting, and then they're going to get some track record. But it really isn't that difficult. And I would say the most important thing, particularly for this audience who's listening in, who you probably have some idea that you're going to start, the earlier you start, the better. You don't want to be in a position where you're trying to fix your roof, during the rain, during the thunderstorm. So there's some easy stuff that you can do to establish your business profile now. Now, you may not have a really good profile for 6 to 12 months, but at least you're working at it. The last position you want to be in is suddenly you need financing, or you're a janitor and you're going to get this contract at the local Walmart, and you want to go in and they ask for your business credit report, and now you realize you got nothing. You want to make sure that you have these things, so when people go to look and they need them, you have them, because you cannot create them overnight. The earlier you start on this journey, and it should be, for the most part, certainly through us, completely cost-free to get going, the better off you will be. Next is, will banks give startups credit cards with no history? The bottom line there is absolutely, but they're going to look at your personal credit. So if you have strong personal credit, you can go to Amex or Capital One Spark, for instance. Those are 2 of our biggest partners, and they will give you a business credit card of some type, okay? If you have really poor credit, personal credit, and your business is not an established business, you're going to struggle. If your business has been around for a while and you've done a good job of establishing that business profile, then you can get that business credit card based on the business, as opposed to a personal card and a personal guarantee. However, like I said, that being said, I would certainly take a look. One of the things that our product does, if you sign up for free, we'll give you your personal score and your business score, and you can go to our financing page, and we'll tell you whether or not you'll likely qualify for a business card based on those scores. So that's something you can do to take care of. Next question is, can your company help my company get those business credit cards that report to business credit but not personal? Yes, we can. It's in our financing page, but the one that I'm really thinking of, and I can't exactly remember the name, but it's from Capital One. Capital One has 3 core cards And there's one card that is specifically targeted to build your business credit profile. So that is, you sign up for this Capital One Spark card, and all of it goes against they're reporting directly against your business specifically to report. So you can either find that through our product, or if you go to Capital One Spark and look at a couple of their products, you'll see the one that they sell there. Next question is, what if you are an overseas resident? Can your personal credit file be accessed or used? I guess that depends. I mean, I think the reality is the bureaus, the personal credit is used for a variety of different reasons. And I know that they have international components. So my guess would be, and I do want to stress that this is not an area where I have strong expertise, but my guess would be that absolutely, if you have a credit profile from one of the major bureaus on the personal side, Experian, TransUnion, Equifax, you should be able to use that to get a business credit card here in the US. All right. Are there any other questions? Before I could see people chiming in, and I don't see others. Oh, Rob asks, can startups based overseas get a business credit history? Boy, you know, I have not been asked that question before. And my guess would be, and it is a guess, is that that is going to be very difficult, particularly if it is a true startup. And I'm, you know, D&B probably isn't there. Experian probably isn't either. If you were an established business, perhaps, but as a startup, that's probably going to be very tough to have a startup established business credit here in the US if you're based outside of the US. Next question is, will business credit make a difference in getting angel or venture capital funding? My personal view there is probably not, right? An angel or a VC is going to look at a variety of things, but most importantly, is this a problem that needs to be fixed? Number two, does this product deliver in a way that no one else has matched and brings some really unique value? And then number three, is the team in charge a team that I think is ultimately going to win? I mean, venture angel investing is pretty much, you know, high stakes poker, and whether you pay your bills on time and you're a very responsible business, which by the way banks care about, but venture investors are usually less concerned with. Obviously, they don't want to invest in shady characters, but they're more looking for you to sell them on an opportunity and a dream as opposed to a mature and responsible financial management. Next is, if a company starts as a sole proprietorship but incorporates later, will business credit transfer in some way to the newly separated entity? It should. So if you start, how you're ultimately incorporated should not matter. However, as the business owner, you should be on top of that. And what I mean by that is you should figure out what they know about this business. And then when that transfer happens, you should figure out what they have on it. And you should not trust the bureaus to get things right. They will not get things right. However, you should be emboldened by the fact they want to get things right. The bureaus don't want to have bad reports. The bureaus don't want to have inaccurate information. They make their living by selling reports to banks, and banks want as much reliable, verified data as possible. So when your business goes from a sole proprietorship, that is something that you should be on top of and make sure that the bureaus know that that happened. And at least through our product or even directly through them, you can do that. So do not trust that they'll get it right, and make sure that you follow up with them so they have it as accurate as possible. Does good business credit help when applying for SBA loans? Absolutely. So if you apply for an SBA loan, they're going to look at something called the FICO SBSS Liquid Credit Score. It's based on a mix of your personal and business credit. To give a plug for my company, we're the only place where you can actually find out what your SBSS score is. Now, it's not free. It's $50, but you get that score and the 4 others. And really, it's an aggregation of your personal credit trustworthiness and your business creditworthiness. In addition, it's also going to be based on your industry type, based on NAIC codes, as well as your revenue and years in business. So if you sign up with Creditera, essentially instantly, if you get the Premium Plus package, which gives you the SBSS Liquid Credit Score, we'll tell you whether or not you would qualify for an SBA loan, whether that is 7A, Express, or 504. So in summary, business credit reports matter a lot for SBA loans. SBA loans are the best possible deal that you can get. You will pay approximately 2 points over prime. It's usually a 10-year payback period. There are all kinds of additional sweeteners and incentives. If you're a veteran, if you're a minority business owner, if you're a woman business owner, it's absolutely where you should be looking if you can qualify. Next question is, how do you get your business credit report free? So through us, you can get your summary report. So what that means is you will get a high level, and actually while we're here, I'll just go ahead and show you. This is our product with your personal score and your business scores. So Experian, Dun & Bradstreet, you can click in here and get some of those details. So the original question was, where do you get your business credit reports? This is the best way to go. Next question is, how do I contact if you need help building their credit profile? You know, from our side, you can sign up for us. We've got folks online who can help, or there's other services where you can pay for, you know, a decent amount that they're gonna charge you for that. But I think if you just use our product for free, you can get most of that value. Well, we're almost at the end of our hour. So thank you so much for giving me this time. Hopefully this was beneficial to you. Our product can be found at Creditera.com. That's Creditera.com. And it is free to sign up. There is no credit card required, and it's free forever. And if you want to get your full credit reports, we give you 4 credit reports for $30. And you can go back down to the free product at any time. So it's not like once you sign up, you're gonna continue to have to pay. We absolutely want to stay on the side of small businesses. We genuinely believe that you guys are the backbone of the American economy, and we want to do everything we can do to help you succeed. So thank you so much, Rob and the Idea to IPO team, for giving me this opportunity. Hopefully this was valuable. I will share the slides as well as the recording with Rob. And if you have any questions, please don't hesitate to send them directly to me. I can be reached at tim@Creditera.com. That's TIM@Creditera.com. So with that, thank you so much for your time tonight, and best of luck to all of you in your future business endeavors. Goodbye.